Welcome to the d.MBA podcast where we share business confidence for designers. And today we're talking about huge reductions in price of Teslas, which is pretty unprecedented and kind of uncommon for a brand of this magnitude, and also a brand that's trying to kind of position itself also slightly as a premium brand. So we're going to talk about Tesla's discounts and then in general about discounting as a business strategy. So what do you have for us, Franz?
Yeah. Tesla's discount. But I think the interesting thing about this episode is that we will not only talk about Tesla like everybody does all the time, but we're going to go beyond that and just go into concepts that are behind that, and maybe also into like the discounting and branding topic, which is very interesting for us designers that lies beyond this act. But we're using Tesla as a frame. So just to get this straight, January 13, Tesla announced that they reduced their prices between 6 and 20% for their Model 3 and the Model Y in the US. And they even reduced by 40% in Asia.
I've read that even Mercedes did the same in China. So it's not like just Tesla did it, right? Many other brands did it as well.
Yeah, even to this magnitude.
I just read that they reduced it by $33,000. So even if you assume that the price of this Mercedes was $100K and they reduced it by a third, I mean, this is huge.
That's it. Only in Asia, but also in other markets.
I didn't go that deep. I just saw.
Why you even say it then now?
No, but it's just the point that it's not just Tesla; it's other brands as well.
That's true. So pretty big discount. What I found interesting is that they even pair it with some goodies, like you get 30-day trial for some enhanced autopilot features. You get 10,000 miles for free supercharging. So it's not only the price discount, but they're basically throwing in what they have. For the full picture, we might also need to add that Tesla actually hiked their prices in 2021 and 2022. So Tesla raised prices several times in the last 2 years. And the reason, as always in the last 2 years, was supply chain issues. So even if we take this into account, the price drop is still surprisingly high. And now the last point to paint the full picture is that stock price of Tesla not looking good for them. So we have 70% drop since start of 2022. Partly market, partly what Elon does outside of Tesla. So 45% drop since Elon bought Twitter. But we cannot only pin this to this fact, right? It's not only the purchase of Twitter, but there needs to be something else. So and that's where we want to go now. Why does Tesla go for such an unprecedented step? Because they have actually always gone with a zero discount policy. No discounts on Teslas. You can't even negotiate in Tesla stores, which is very uncommon for cars or in general high value goods. Mm-hmm. So that's the first point. Then we also go into what this might mean for Tesla's brand, which is going to be super interesting, or what it also means in general for brands if premium brands play with their pricing. And lastly, as always, we're going to talk about how this is relevant for us as designers.
Let's jump in.
Cool. So the most immediate explanation of this move is that the market for electric vehicles is expected to cool down. So this is usually how the easiest way to explain a drop in prices, right? The price is a lever to control the demand. And just in general, lower price boosts demand, higher price lowers demand. And companies actively use this measure to optimize their outcome. And as we all know who listen to this podcast frequently, is that it's not always the best to sell as much as possible, but companies optimize for the best outcome.
What I'm sharing here is exactly this, like 101 economics. That this is one of the first things they teach you when you go to a business school, which is if you have a higher price, fewer people buy, and by lowering the price, more people will buy. But I remember that when my business school professor shared this photo, he shared a thought experiment just to say that maybe this is not true. So if you will allow me just for a minute, just to explain what he said. He said, okay, imagine that now you're trying to buy a mouse for your computer, right? You go into a store, and what this graph tells you is that most people will buy the cheapest mouse, right? But then he said, okay, imagine that you're there and they have 3 mouses available. One is $10, the other one is 20, and then the third one is 50. Which one would you buy? And he was basically polling like a whole of 300 people to raise their hands, and most people went for the 20 one, right? And this was just a thought experiment, but I think it also showed me that this theorem of lowering the price, increasing demand is not exactly correct, especially for certain goods. But that's what at least Tesla is counting on, lowering the price, increasing demand, right?
Yeah, I mean, there is first a market level, right? So price doesn't only mean price of my thing. So price, general price, average price of something. If the average price is lower, this usually leads to more people buying because more people can afford it. Higher price, average price in the market usually leads to fewer people buying because it's not as affordable. So that's more economic side. And then for this specific part, it's definitely debatable. And then it's about stealing market share from somebody else, right? But I'm going to get to that later about this, how this is now a competition between between different companies. But now let's just keep it on this general level of so what is this general situation in the market and how could we understand why Tesla now reduced their price? So currently they just seem to be worried that about the position or about the situation of the market. So rising competition, we see more and more not only companies who produce vehicles, but also electric vehicles, but also like the product range is growing. So more competition and at the same time, lower demand. So again, this cutting prices seems to be a smart move because what you can do is position your product as the option that is better or that people will buy. So you will actually have higher demand. The problem though is that this is not a great sign for investors. And after all, Tesla is a publicly traded company whose stock price has plunged basically. So if you do such a move as reducing prices, then you're also sending a message to investors saying our market is not in a great place. So you have this risk of stock falling even lower. So that's not great. And this is why we have Tesla spokespeople saying that that's not the case, right? Tesla spokespeople say that they cut the prices only because this is basically normalizing price levels. So we hiked prices because we had problems with supply chains earlier. Now we're normalizing price levels and we're not as worried about the market. And furthermore, what they're saying is that they are or have been ramping up productions and they have now better economies of scale, which means they can produce at lower unit prices. And this is also what they want to pass over to their users. And especially this second point speaks again for Tesla's worries that demand is going to be lower because higher capacity doesn't pair well with more production capacity. So Tesla has been telling investors that they increase capacity by 50% each year. If you have this capacity, you kind of also need to sell out your cars, because otherwise that's not a good investment. So we see already this maneuvering that Tesla needs to do, that there is definitely reason when it comes to demand for lowering the price, but it's not as easy especially if you are a publicly listed company. And there are two more interesting reasons I found why Tesla might be doing this and how it might also help them sell more cars. First, it could be a reaction to rising interest rates. So you know that many cars are financed. Now financing gets more expensive. So you kind of need to lower the price of your product, but it's going to be still the same overall cost because the financing is more expensive. So if Tesla wouldn't reduce prices, Tesla's prices would actually rise by this new situation with interest rates. And lastly, countries have incentives to buy electric vehicles, but usually they cut out premium vehicles because they don't want to help the rich, but rather want to basically also help people who are not able to buy premium vehicles. And this is why now this tax cut actually makes sense for them, because Tesla cars qualify for these tax cuts now after the cut. So basically what I'm trying to show here is that price is definitely a lever for controlling the demand, but in a way it's not like you're not completely free in choosing this, and there is much more that goes into this decision. It's not only, as you said in your example with your business school professor, it's not only, hey, I'm going to lower this and I'm going to sell more and I'm going to raise it, I'm going to make more profit, but there is a lot of details that go into these pricing decisions. But still, in the end, it is a lever to control demand.
Yeah, I mean, definitely it's a lever to control demand, but it's also being used in strategic ways, right? So like what a lot of startups do, or what corporates try to do to startups is like so-called price wars. So they lower the price so that they would squeeze out some startups from the market. And then you strategically need to, go into a price war and kind of lower your price as well to survive. Or you can be the one that's trying to kill another company and basically lower the price. So there's a strategy considerations as well. So, but mostly as designers, we would be just thinking about the branding side, right? So like, lowering the price is bad for the brand. Because then people will expect this new price, and this is lowering the story that we are creating around here. And I guess you'll go into this next, but what I wanted to say is that definitely like pricing is a big part of making a decision of how you want to run the company. And sometimes maybe for a short period of time, if you go against your strategy, which for Tesla was just not budging on the price at all, I think it may help. It may help for a short term to establish your position in the market and then go back to like non-negotiating. So as long as this is not too frequent, I think it may not be as harmful to their brand.
Yeah. I think I would actually like to talk a little bit more about this price war topic. Mm-hmm. Did you see that coming for electric vehicles?
No, I thought in the COVID pandemic, I had a feeling that cars are the hottest commodity. They're just getting more and more expensive. So I didn't see it coming, especially not for electric vehicles. Did you?
Not at all. But for now, actually, this for me seemed to be the biggest backing factor why Tesla would actually do this, and also interestingly why how Tesla could actually get out as the winner of this war and why they would actually like start this. So maybe we should even go one step back and talk about why would anyone do this even? Like, why would anyone go into a price war? Because it seems like it's bad for everybody, right? So why wouldn't you just keep prices stable and everybody's happy? And why do companies have price wars?
I mean, one example is you try to run your competitor out of the market.
Yeah.
You know, if you actually have lower prices, they can't afford to be in this market anymore. There's actually also law that goes against price dumping. So if a government, if regulators can figure out that you're actually selling below the price that is profitable for you, then this is price dumping and then you need to stop with this. But if you are actually be able to sell something cheaper than somebody else, you can use it to drive them out of the market.
Yeah.
That's one example.
I mean, the interesting thing, because I started reading up on this, the interesting thing is that a price war is almost inevitable in the course of a maturing market. That's an interesting thought when you go about this, because like, and that's why I think foreseeable is always a weird word when something already happened, right? But it's at least explainable with this. So all markets basically go through maturity stages, right? There is introduction, there is growth, there is maturity and saturation, and then in the end there is decline. And that's what happens for every single market. No market lives forever. If you just look at companies in the Fortune 500 list, most of these companies are not older than like 20, 30 years. So that's the same for every product. So usually you have introduction phase. There are very few companies. They can charge higher prices, and they actually have to charge high prices because it's very expensive to produce something, right? Then you have the growth phase. In the growth phase, you usually see a lot of market entrants, a scattered market, differentiated products, high growth, but still like moderate volumes for all competitors, and still kind of high prices. And then is maturity and saturation, which usually comes along with standardization of products, broad adoption in the market, so lower prices, and in most industries also consolidation of the market. And this is where we seem to be at the moment in the EV market. So at this stage, it's about volume and unit economics. So companies basically fight for market share, and sometimes, or I would even say eventually, going into price wars, which results in companies being run out of the business or getting acquired. So I think this is a natural strategy, which Tesla actually seems to be ringing the bell for and actively pushing, because it feels like they are quite well set up for this. Because what they have done is aggressively increasing their production capabilities in the last years. Just remember all the Gigafactory news and all these news of, hey, we're gonna double or increase our production capacity by 50%. What they actually did is 47% in the last year. So imagine this, a car company increasing production capabilities for 47%. So I think that's actually, from this perspective, quite a smart move, because it still seems that other car manufacturers, even the big ones, have trouble with production capacity.
Yeah, but I would argue that it's bad for them because their stock is plummeting, the stock price is going down, and they're in a much worse position than a more stable brand. I don't know, Mercedes, BMW, and so on. They also have money coming in from other sources, so not just vehicles itself, but also not just electric vehicles. So in a way, they have even less assets now to back their further, like adding more capabilities or even surviving. Because when you are engaging in a price war, you may be increasing your top line. So top line means like revenue, but you are also decreasing your bottom line, which is profit. And a company like Tesla, I would argue, is still in the stage where it needs profit more than maybe an old manufacturer like BMW, Toyota or so on.
Interesting thing is that Tesla has one of the biggest profit margins on units in the full industry already now. So I fully agree that this is like super risky business. But I like when you think of boldness of decisions of Teslas in the past, it might also be the only, like, it's almost like attacking in seemingly weak position, and the only option that you have, or not the only option that you have, but one option that you have is attacking rather than defending. And I think this is quite what to expect maybe from Elon's strategy decisions.
Yeah, I mean, I'm becoming less and less fan of his strategies because it seems like he's always betting everything. You know, he goes all in and it worked until now, but at a certain point it's not going to work. And then what are you going to do? So this may not be an all-in move, but it's very aggressive for sure. And if it doesn't work out, combined with the plummeting stock price, you know. Yeah. And why is the stock price so important? It's important because, like, for example, if you want to go to a bank and tell them, hey, I want to open a new gigafactory in Brighton, for example, right? Or whatever, then they are going to ask you, yeah, how are you going to back up your loan? And then you need to back it up with something. And this is usually your assets. And as a company, your assets usually is a public company, it's stocks. And if your stock price goes down by 70%, this means that what used to be 20% for your project is now maybe worth just like 5% of your down payment. And if you actually already engaged in taking a loan, now you have to have more collateral and so on. So it is super risky, especially in the downturn. But yeah, that's what makes Alan.
And just going back to maybe now beyond Tesla again, because that's what we thought, that's what we said we want to be doing, right? So I think in general, every industry or many industries that get into this maturity phase are at risk of getting into a price war. And you might also, so you definitely can prepare for that, right? It's about having your costs under control. It's about having good unit economics. And if you are in charge of a business, you also need to be prepared if you're in one of these markets. And the thing is, it can work, but general price wars are super risky because what you're risking is a bullwhip effect. So in essence, for a price war to work, there need to be losers. So there need to be companies that go out of business whose market share you can sustainably capture, because otherwise you're in huge trouble. Because what this means that you will propel short-term demand. So you will produce more stuff because you expect to capture more of the market in future. If others are able to adjust and don't go out of business, this means that the market goes into balance again. Prices stabilize at a lower level. You're left with overproduction and full shelves. Same volume as before, but lower unit economics. So that's a very big bet. And that's a very risky game to play. So if that was the thought in the back of this decision, then that's a bold one. That's a really bold one.
Would you say when does discounting make sense? Now we're talking about why this is risky for Tesla and so on. Yeah. So I tried to prepare a list. Yeah. It's something I called oversimplified but useful.
Is this a new section in the podcast?
Yeah, if we would have the studio as set up, I would even have a jingle for it. But okay, so let's talk about oversimplified but useful. So I was thinking for myself, okay, so this for Tesla, it's a pretty risky move. I would put it probably under, but let's start with the S's. Okay, so where definitely people are used to discounts is like fast moving consumer goods. So we're talking about diapers, shampoo, cleaning supplies, batteries, You won't hold the grudge against the company lowering the price on Tuesday if you bought it on Monday, which is, by the way, what happened to Tesla, because then people came into the stores and were like, hey, I want my discount as well. You don't expect that to happen with diapers, right? Then I think it makes sense with perishable goods, things like fruit, meat, milk, and so on. You kind of expect people and companies to just discount so-called clearance sale when they're trying to get rid of the goods. Then apparel. I think we got used to apparel like T-shirts and stuff just being discounted. And the rationale there is like, oh, this is an old style. Many people don't care, and that's great for them. Then, like for me, I don't care. Like I usually wait until January or February until the prices drop. Like right now, I have a couple of things in my Nike app waiting for them to do the discounts. Don't tell me you're not the same, Franz. Not doing that?
Exactly the same.
You put it in your order, and then you're waiting for them to drop the prices.
I'm waiting for sales because there are some goods that are just. I mean, that's a whole. Are you ready with your list? Because I have something interesting.
No, I'm not done yet.
Okay, then I'll keep my talking point and let you finish my list.
Okay, so next on is if you are running, I don't know, let's say you're a hairdresser and you want people to come back to you, there is a loyalty discounting, and you can say, hey, if you come back for the 10th time, I think that's fine, Then we have bulk orders. So if you're buying a lot of something, you should ask for a discount. And if you as a company need to get rid of your stock, if you have a lot of something on your hands, I don't know, a lot of bikes, and you want to sell them, then that's when it's okay. So fast moving consumer goods, perishable goods, apparel, loyalty stuff, bulk orders, and you having too much stock. You want to add anything to my yes list?
The interesting thing here is, did you hear about Elon Musk's rule for discounting?
No.
So I'm trying to put it up, but I can't find it. But I think I have it. Give me 1 second.
Yeah. I think Tom just shared it also in the chat. There can never, and I mean never, be a discount on a new car coming out of the factory in pristine condition.
And
what was this?
The second part is more interesting. The sentence continues.
I don't have the second part. Tom doesn't either. So you'll have to look it up.
Where is it? Tom, can you send me I know where that it is in the same article.
What does it say? Paraphrasing. Do you remember?
I'm paraphrasing it. Imagine somebody coming in tomorrow and saying, hey, this person got a discount. If you cannot explain the reason for this discount without feeling bad yourself, then that's a wrong discount. So, like, if there is a discount, this discount needs to be reasonable. That's bulk, that's loyalty, that's whatever. But as soon as you kind of feel, I can't tell this person this because they will be disappointed, then it's not a good discount.
It's a good one. Yeah.
And the interesting thing is, like,
he just did that. It's the same car that was sold for this price. But I mean, enough about Elon. So did you want to go further with this one?
I think we can stay at this point because that's the interesting link now to branding, right? So does this hit your brand if you do such a thing? And let's start with like Tesla in general, but also let's go to the broader side again, right? So first thing is that Tesla basically had little to no advertising. Just remember this, right? Tesla doesn't advertise. Tesla built their brand with two things. First one is Elon Musk. And we all know how that's going with Elon's personal brand. And loyal customer base. Even like some people even call it Elon's dude army. because they're defending him. And it's also like people who bought the car, they burn for it, right? They love it. They talk about it. They can't stop talking about it. So this like customer base that is loyal is just super important, and a super important part of the brand. But obviously now, and you mentioned it already, people are very disappointed because they feel betrayed. Because imagine you bought the Model Y in November for $72,000, and now in January you would buy the same thing for 60. Like you just lost $12,000 because no reason.
Yeah.
Exactly. And that is just eroding trust from your customer base, which was a very big promoter for your whole brand. So if you have like these two things that build your brand, you just hit one very fiercely. Because, and that's what you were saying, right? For some things, we're just used to have discounts. I'll wait for Black Friday, Christmas, Valentine's, winter, Easter, summer sales to get better prices. And I would even say it the other way around. What you're doing is you are paying premium if you want something now. I think this is how cheaper products work. If you have the patience to wait, you'll get the discount, but you're paying premium if you need something today, and it's not coincidentally one of these sales. And that's completely normal. And it's completely normal to say, I need it today, I'm going to pay 20% more. Or I missed this sale, so I'm going to pay 20% more. But for goods with this higher price, and a car is one of them, customers expect that companies honor the price. And they don't sell to anyone cheaper for no reason. And as we said, ironically, that's exactly what the core principles of their pricing and sales strategy was, that they wouldn't have such things, discounts for no reason, and people needing to, or people being dishonored or feeling dishonored because of these practices. So I think that's a big hit to the trust and loyalty of the customer base.
So you're putting a big item tickets under the no bucket, right? So if something is expensive, it's not the same for when it comes to discounting. Yeah, I mean, what I wrote here is also everything that conveys status symbol, right? So if it's something that you want to convey status with, car is definitely part of that. Maybe it's a handbag, maybe it's a watch, a jewelry, art, whatever. Yeah. Then it's a big no in discounting in my head. Yeah. There's a few that's maybes. So a maybe for me is like software. And that's a tricky one. I mean, a lot of designers work in the SaaS space, right? Creating software. So what do you do with discounts there? Do you have any thoughts? If not, I can also share what I think about it.
I have a huge problem with software pricing in general.
Yeah, we can talk about HubSpot if you want. So our CRM provider.
We just said it's hard to give discounts for no reason. It's also hard to understand pricing if there is no reasoning and no direct cost involved and it's just bundled. But that's, I think, is a completely different topic. Okay, but software, go on.
No, I just think in software, I think what has what kind of has developed over time is this like tier pricing, and this tier pricing in a way is kind of discounting, right? So you have a product that essentially costs nothing to an addition. So for a company to roll it out to an additional customer, the marginal cost of the additional customer is almost close to zero in most cases. And so for them what they do to discount in a way is they just take features off of certain plans. And that has become universally acceptable. Also psychology plays a role here. So if it's acceptable, then also it becomes part of the business norm. But what's not acceptable is like, at least in my mind, I think it's not a good idea with SaaS is to do like this Black Friday promotions type of thing. That that leads to all kind of problems. You get these worse customers, let's call them, who are basically come there just because of the lower price. And according to some research, that just leads to higher churn rate. So then people getting used to the lower price. So when you want to sell them the normal price next year, then they churn. So they just find another service. That also kind of affects your profit margin as a company. And you just have much more unpredictable growth because these people that kind of sign up with a lower price also have much more unpredictable pattern of when they sign off from the service. And it just leads to all kinds of troubles. So that's why I have it in the maybe section for the SaaS. So like, yes, discounting, but with caution.
Yeah. What do you think like discounting does for a brand in general?
It depends on what kind of discounting. I think for some brands, I think it's part of the brand to do discounts. Like if I go to a discounter, I hope there are discounts. If I go to IKEA, I'm not surprised if there are discounts. But if I go to BMW salon, then I don't expect a discount. Or I don't ever expect any discounts from Apple, but I'm very happy when I got one once. So let me tell you a story. So I don't know what was the occasion, but they did it very smartly. So instead of giving me a discount, they gave me $100 gift card, which is essentially a discount, but they just camouflaged it differently. So if it doesn't work for your brand to do discounts, maybe you just need to find a different camouflage for it. Yeah. Sorry, what was the question? How did I get here?
So I wanted to talk about the impact on a brand of discounting. And now in pure like branding terms, not like for which products it might work or for which not and how to actually do it, but just in general, like what could discounts do to a brand?
It can destroy it or it can amplify it. I think for certain ones, as I said, if it's part of your brand story to be like, we are affordable provider, then I think it amplifies it.
Yeah.
But if it's part of your brand to be we're premium, then it can just work against your branding.
Yeah, fully agree. I mean, this is completely dependent on strategic decisions you have already taken in the in the past. Yeah. So if your strategic decisions are basically guidelines for everything you can do and can or should guardrail all the decisions that you're making. And if your strategic decisions have not prepared your customers for discounts, then it's not gonna turn out great. And actually I found two interesting examples actually. So I'm not a branding specialist, honestly, but I found two interesting things that I found quite practical, especially for a brand like Tesla. And the first one is this negative signaling that this can just have for users, right? So if they're cutting a price so much, this signals like that's weird, right? Especially following the price policy that Tesla has done, the strategy Tesla has taken before. So that's just weird for everybody. So it raises the question of why would you do this? Are you in trouble? It seems like your product is not worth as much as before. Like the brand is perceived as less valuable. And the interesting thing is this is exactly the opposite of, let's say, Red Bull. Like Red Bull uses so much positive signaling. So basically they can sponsor like the coolest athletes and the coolest events on the planet. And it seems like they're doing great. And that has nothing to do with the pricing, right? This actually leads to high value perception and high value brands. And you're also then expecting to pay more for this. And that's exactly the opposite signaling that you get from such a price cut, from such a fierce price cut that goes against strategic decisions before.
I have a list of, I think I came up with like 5 considerations to think about when you're thinking of discounting or not. So now we talked about brands, right? So definitely brand story that you're creating. If you're creating if you're starting from zero, this should be part of your thinking, like what kind of brand I'm creating and what's the pricing strategy. Another one is also geography. I think there are certain locations, certain markets that just expect you to do some kind of negotiating. For example, Middle East, like you don't go there and just pay the full price on the market. Then we talked about strategy. So there's things like price wars and so on. Then it could be just purely financial. We just need to survive, And we just need to lower the prices because hopefully with this, we will clean up our warehouse and hence we can start selling the more profitable product and so on. And lastly, there's a consumer psychology. I think this is kind of baked into some of the other ones, but it's like, what am I signaling to the market if I make this choice?
Yeah.
If I start discounting. And what we also discussed is different flavors of discounting, and you can maybe do one, but maybe not the other.
Yeah, true.
Because maybe just to give an example, so what Tesla could have done and is just try to better argue for this price change. Like we took this feature away from this car because one of the things they pride themselves with is like, hey, we are a software company, not a hardware company. Well, then do what all the other software companies do and just take certain features from this car and just set it at a lower price. And then maybe gradually, or maybe make it more gradual. And that's what I wanted to say. So.
No, I fully agree with this reasoning. And this is, so I read some articles where they practically made fun of Tesla spokespeople who said this price cut is because of normalization of prices in the supply chain. And everybody was like, I mean, can't you try harder at least? I mean, that's a joke.
Argument, right?
No, yeah, nobody's going to believe you this. And obviously you're in trouble. So if you do this, then do it in a smart way so that people are not put off by this negative signaling. Don't make people believe that there is something weird going on, but there needs to be reasoning, or in the best case, even actual reasons that this happens, right? And if you change your product features, for example, that definitely works.
Yeah, it was kind of a lazy job from their side. But it just got so popular to bash Tesla. I feel bad about it almost.
I feel good about it that we also talked about more than just Tesla itself. And it's nice that Tesla keeps providing us with examples.
That's why they're being talked about all the time, because they're in the news and they always do something controversial. Ready for the learnings for designers?
Yeah, definitely.
Yeah. So the big point for me here in this topic is that price equals UX. So just take this away from this podcast. So pricing, the way you do pricing, and discounting is a part of the pricing, is and has a huge effect on the user experience of your customers. So the way they pay for it, how much they pay for it, when they pay for it, can they resell it, all of this is UX. So by us forgetting to think about it, we are actually forgetting to design big part of the product. Because the way I feel about the price has huge effect on how I talk about the product and how I use the product and how I promote the product, which is the whole reason we're discussing this, is because there were pictures of people in China who were like protesting against a discount. Well, essentially they were asking for discount as well, but actually the whole thing was funny because when I saw this, initially when I saw the article, my reaction was like, yeah, so what? Like, I know that this t-shirt I bought 2 weeks ago is now being discounted today, and I don't go to the store and protest against it. But then I started thinking that, hey, actually Tesla has a different story and all of this comes together. And this goes to show that, yes, price is UX. So even if we can't affect price because it's already set, it's part of the story, and our design needs to help sell and explain this story. So I think this is the biggest takeaway that I would have for the design community.
How often have you been asked to give help when pricing somebody for the first time, something for the first time, like a product, setting the price for the first time?
A few times.
Yeah. Do you have a good answer?
I mean, I approach it from two different perspectives. I think a lot of the times the question comes from the perspective that they have no idea what it costs them to make it. And that's not good. I think when you're starting off, you need to understand what is the cost of the product. But once you do the calculation, then you need to throw it away. Because you shouldn't do, most of the cases, I would say it's not a good approach to say, this is the price and let's do the markup. Let's just add this percentage. But then you start from the user perspective and try to understand what is the value that you bring into the table. And you hope that there is some discrepancy. You hope that the value you bring is higher than the cost. And if the value they bring is 10 times as high, so be it. I mean, that's software, right? For example. But if the value you bring is just 1.25, so 25% higher, then it's going to be hard to survive. So that's my approach usually. Try to understand it from both sides.
Yeah.
Have you been part of these discussions? It sounds like you did. You have been.
I fully agree, because the feeling I get when somebody asks for pricing help or a pricing course even, it feels like they're asking for mathematical functions that go into the direction of supply and demand, right? Hey, if I sell this price, if I set this price, I'll sell these many items, and now we can change this, and we will basically go from this end to the graph to the other end of the graph. And also we need to, basically it's a calculation exercise. And I fully agree with what you said. It is a calculation exercise to the extent that you need to know how much it costs. And if it doesn't cost, if you can't charge more than it costs, then it doesn't make sense in any case. But everything else is a psychology, UX, exercise, and has nothing to do with maths.
Exactly.
Not at all. And yeah, that's
why designers need to be part of the price discussions.
Exactly.
Because that's what designers are great at. And we shouldn't forget this. We're great at understanding psychology. We're great at understanding triggers. We're great at understanding people's lifestyle. And this puts us in a really good position to understand the alternatives. So how people are comparing our product or service, or to what they're comparing it. And through that, understanding the real value we are creating and with what our product is being compared.
Yeah. And for me, it goes even further. So you just said that's why designers need to be part of this pricing. I would even say that the designers that many designers that I have talked with, they're the ones holding back. They're the ones not going into it because they feel like it's all math and calculations. And what I want to tell them is, look, yes, there is math and calculations because you need to know the cost, but the rest is people sitting in a room and throwing in numbers. And that's it. Like pricing means 3 people, 4 people, 5 people sitting in a room, somebody saying 1,500, somebody saying, well, that feels a little bit too high because I have seen this alternative. I have talked to these people. I think this is what people expect. Then the other person says, okay, then what about 1,420? Yeah, 1,420. And the discussion goes on and on. This is how pricing works. And this is exactly where we can contribute. And the only thing we need is information about what it costs and also information about how big is the market. So where is the ceiling? And everything else in between is design work.
And the last thing we need is some business confidence.
Yeah,
that's why, dear listeners, if you listen until now, you should check out the MBA. As a side note, but not really, like there's going to be a d.MBA starting in April. So if you're interested and if you listened until now, you may be a good fit. So check it out at d.MBA/course. And there you're going to learn more about the skills that we cover. We don't really go into pricing, but we do talk about the business skills that are relevant for designers, and through that, the language that you can use if you're part of the price discussions in the future. Alrighty, that's the pod, right? Anything else? Anything we forgot?
All good. Was fun.
Perfect. Thanks, everyone. See you in the next one.
See you soon. Bye.
That was 50 minutes, as usual. Good. Oh, yeah. I thought you already did it.